The National Investor's motto is, you can get information anywhere, but here you get knowledge. And for well over 40 years now, Chris Temple has imparted that knowledge, an unparalleled, understandable, and useful take on the big picture of the markets and of our world. He has been out in front of what you see on the news every day on many themes. More, Chris has taken this macro knowledge and his unique analytical abilities to uncover unique investment opportunities. Often, he has guided his members to big winners in resources, biotech stocks, and more. His talents and connections often getting him into ground floor opportunities before they are discovered. Without further ado, here is Chris with today's topic.
Welcome back, folks. I'm going to dispense with my own usual solo introduction and get right into a return visit with my good friend Scott Melbye, who is the head of the Uranium Producers Association of America. He's the vice president of Uranium Energy Corporation, and he's the CEO of Uranium Royalty Corporation. Scott, good to see you today, as always.
Chris, it's great to be with you and coming fresh off a week back in DC. So if you look away for an hour back there, you're going to miss something. So
Yeah.
exciting times.
Yeah, I figure. And there's a lot of stuff going on for our domestic metals and critical minerals industries generally. For uranium specifically, we're going to give people an update. Couple quick preliminaries, folks, before I get into quizzing Scott here. First off, if you didn't see it before, I'm going to throw the cover slide on the screen here real quick for you. Go back to the end of December when I had Scott here last to give a broad sector view of what's going on with uranium. That's a lot of background. We're not going to repeat all of that today. We're going to update it somewhat. So if you've never watched it, it wouldn't hurt to go back and watch that. And secondly, we're going to wrap up later on with a couple specific tidbits about Uranium Energy Corporation. And so I wanted to put on a screen here as well the forward-looking statement slide from UEC's corporate presentation, because Scott and or myself in that context or otherwise this conversation might be making some forward-looking statements, and they might come out as and when we think they might not. So be aware of that. So anyway, Scott, you and I both are in agreement on a lot of things. One is that through the end of 2023, we enjoyed what I've called Act One of a new renaissance for the uranium and nuclear energy industries. UEC stock at one point was up tenfold. Now it's more like fivefold or so, but still a nice move from the bottom. We both are of the view that Act Two is going to be upon us imminently. There are some reasons I'm going to want you to go into why that's kind of been delayed and why this recent correction has gone on. But there's not really anything of substance that has derailed the core supply and demand story, is there?
No, I mean, that's the number one message I'd love to convey is if you're feeling anxiety of where your uranium investments are, having touched 52-week highs, last year and touching 52-week lows now, uranium price going from 106 and now trading around 65, you might come to the conclusion that there's something wrong with the narrative or the thesis. And that couldn't be further from the truth. It's not surprising that uranium equities will sell off with the broader market, with the anxiety around tariffs and all that. So we weren't going to be spared from that. But we did trade, down even further than what the broad markets were due to things we talked about last time. There were a number of sort of false narratives around DeepSeek and that would potentially kill the investment in data centers and infrastructure, power infrastructure to power those data centers. That couldn't be further from the truth. Microsoft, Apple, Amazon, Google, moving forward with very large projects, which, in the United States is really going to favor natural gas and nuclear. It's not one or the other. And they're not investing in just one or the other. They're really looking at both. I think in this energy dominance policy and posturing we're in this Trump administration, if natural gas can't kill it on all fronts, build the pipelines, drill, and nuclear, we're going to need to license, permit, bring on small modular reactors, get, some reactors like 3 Mile Island and Palisades back online. If we don't do that, we're gonna lose the AI battle. with China, and frankly, risk blackouts in the United States. We now have massive load growth, demand growth in the United States like we haven't seen since the early 2000s. So even before data centers, even just with electric vehicles, electrification of homes and businesses, we've really eaten into the reserve margins that our utility companies across the United States have enjoyed for some time, and we need to build big base load again. So, that scare on DeepSeek was completely misplaced. I think we also continue to hear
Wait,
worries about.
Scott,
Yep.
let's dive into that just a little bit more first because you said
Mhm.
something I want to make sure it didn't get past people. Even before AI,
Yeah.
you had talk about data centers more generally. Before that, it was cryptocurrency mining and whatnot, which is still a
Mhm.
hot thing. God only knows why, but that's another subject. And it all underscored the fact that as time goes on, and it's in this country and it's in the rest of the world, there is no such thing as an energy transition, really, as much as there is an energy addition. You talked
Yep.
about the load demand in the US, and this is true elsewhere. I mean, the demand for all forms of energy, all forms of electricity just keeps rising. It's not doing anything other than that. And so, the story was bullish before we even got to that point of this latest DeepSeek news when this Chinese entity purportedly for a lot cheaper and more efficiently with less power usage can run AI platforms and whatnot. Well, gosh, that's a pimple on a fleet compared to overall energy needs and the whole big picture story. So I was really astounded at the time when that was an excuse for
Yeah.
uranium and nuclear energy to sell off more because it really didn't change the long-term story.
No.
Um, Tell us about, another aspect I think has been Russia
Yeah.
recently. On again, off again. We're going to have a ceasefire. We're not going to have a ceasefire. There's going to be a reduction in sanctions. Now Trump is threatening more sanctions if
Yeah.
Putin upstages them and doesn't agree to whatever Trump wants him to agree to. But you and I talked in December, and this is a reason, folks, to go back and watch that, if nothing else, that with or without the sanctions against Russia and now a ban, such as it is, of Russian uranium and enriched uranium products coming to the US, that uranium increasingly is going to stay in that part of the world. And we still have to fend for ourselves, don't we?
Yeah, I mean we're in a resource battle with certainly the Chinese, fastest growing nuclear program in the world. They'll surpass the United States by the end of the decade. They're quickly gobbling up uranium mines in Africa and, consolidating their ownership in Kazakhstan. And you have the Russians controlling half the production in Kazakhstan, and now the Chinese quickly consolidating the other half. So with or without restrictions, I don't see, the uranium in Russian enriched uranium is really Kazakh uranium. And so I don't see that being a threat no matter what happens going forward. But I can tell you, having been, on the Hill last week, no one in the administration saying, no, we're going to lift the Russian ban. And certainly the people that matter the most is Congress because it's a legislative ban. It's not an executive order. To lift that ban, you would have to pass a new piece of legislation in a very crowded legislative calendar. There's no space for something like this. And the purpose of this bill would be solely to benefit Putin at the expense of domestic uranium conversion enrichment. No member of Congress is going to vote for that. So I think it's kind of crazy that kind of the Twitter pundits continue to opine about this, but there's no chance of that going away. And as you mentioned, even if it did, the world's largest uranium producer, Kazakhstan, is largely being consumed by China and Russia for their own needs and their client states in places like Belarus, Turkey, Iran, and elsewhere.
Well, and Kazakhstan too, Scott, and I think you and I discussed this fairly recently. They've had some production challenges. The whole industry globally has had the same challenges because of shortage of sulfuric acid that's needed in the process to come up with saleable products and so forth. But Kazakhstan, maybe this is an overstatement, but for a long time they were able to really borrow a lot of future productive capacity by flooding the market. They were able to get away with it. And did
Yep.
they really have the room to stay such a large incremental producer in the first place globally?
Yeah, it's, they really have tailed off. I mean, they voluntarily brought production back at one point, finally followed suit of all the other Western producers and cut back production. And now they've just been unable to get back to even their licensed nameplate capacity. And, to give you an indication, we've seen a little bit of strengthening in the spot market over the last couple days for trades that are done in France or in the United States. You're seeing about $1 to $2 premium for those locations. One of the buyers at the location in France over the last couple days has been the Kazakhs. So here, the world's largest producer of uranium is buying uranium in the spot market because they've got more sales commitments than they've got production to fill those. So that's a common theme right now where we're also finding that mining isn't easy for a lot of mines that are starting up, and even the restart of operations, which should be easier than a greenfield mine coming into production. We're finding producers are not meeting guidance, and many of them have very heavy contract books that they need to deliver into. And what happens if they miss production guidance? Either they have to go into the market and buy it to satisfy, or if they claim force majeure for some reason, the utility needs to go replace those pounds they had under contract. So, yeah, I think the fundamentals now we still have that 50 million pound gap between consumption and production. That kind of deficit is only going to widen now that demand is growing. We see nuclear energy growing at about doubling by 2040, just on the
Wow.
existing reactors that are in operation or under construction coming online. I think you get into the tripling of nuclear power if you add the small modular reactors for data centers and the like. So we're not bringing on mines as quickly as we're bringing on reactors now. And that's very interesting because we don't have inventories like we had for many, many years. That big inventory overhang was the cushion. That was, the slack in the system that allowed prices to kind of stay where they're at. We don't have that luxury anymore. New mines are needed. It's maybe surprising that we're seeing uranium trading at $64-$65 a pound in light of this, but we've also seen utilities kind of frozen out on their activities. First with the Russian ban and wondering whether that was gonna the waivers that were granted under that process, how those were going to play out. Well, that process is still in play through 2027, but in 2028, Russian uranium's gone. And so you have that. You have the tariff uncertainty for utilities. Should they be buying now? Should they wait? But like someone who's swimming and holding their breath underwater, you can only do that for so long. So every quarter where this long-term demand kind of gets a little bit closer to that wall of uncommitted demand, things get really interesting. And I don't think we have to wait 2 or 3 years for that. I think over the course of 2025, you're going to have a very steep recovery again in the spot price. And the impact on equities will be quite pronounced, especially trading where we're at today. I mean, UEC is
Right.
trading at 5 P to NAV, has just gotten into production at very low cost in Wyoming, bringing on production in Texas. Yet we're trading at $4.50 a pound. And I could go through a number of uranium equities and kind of give you the same analysis that we're extremely undervalued right now as an investor. It's a great entry point to
Yep.
either open a position or add to existing positions right now.
Yeah. When you and I talked, I don't know, a couple of weeks back, just to catch up, not a video or anything, but just to keep in touch, of course, you mentioned another thing that I had not seen. I had missed this, but yet another reason to explain to folks more fully why there's been this prolonged and exaggerated in a couple of respects correction in this whole space is that there was some interest in Kazakhstan that basically had to sell uranium that they had stockpiled. They were trying to set up something similar to the Yellow Cake Fund in the UK or even a Sprott Fund for that matter. and didn't do it right. They had to unwind a wannabe ETF that just never got off the ground. Tell us a little bit about that.
Yeah, and that, if you're looking for a real reason for the spot prices to have pulled back, that's a good one. 'Cause we really haven't had those kind of unusual inventory overhangs for some time. But you're absolutely right. They were going to launch this fund. They bought 2.6 million pounds, but failed to launch on the Astana Stock Exchange and go forward with the concept. So in November of last year, Kazatomprom was kind of tasked with selling this material. I think they had found a buyer, then they unwound the deal, and then they went back out in the market over December, January, February, and was very sloppily kind of introduced into the market, and then those pounds were churning amongst traders. So, it had a real impact on the spot price, but the good news is it's finite. And like I said, in the last week or so, we've begun to see the spot price, kind of inching back up. So hopefully we found the bottom there. I can't imagine that spot price would stay at 64, 65 for long when the long-term prices that producers are able to get is in the 80s. Even just the carry trade dynamics would close that gap very quickly. You'll have traders buy spot pounds and sell them forward at those long-term prices, and all of a sudden that spot price is no longer 65, it's 75 or 85. So I think we just have to be patient. We don't see any clouds on the horizon, and quite the contrary, we're seeing all the fundamentals extremely positive. I think we just have to get out of this period of uncertainty in the broader markets. Obviously,
Yeah.
is kind of cast a cloud over everything. But if people really focus in on uranium supply and demand and the trend towards more nuclear power and small modular reactors, and Trump policy, I mean, you see energy dominance in the United States means nuclear energy alongside natural gas, and maybe to some extent a longer run for some of our coal-fired power plants. That's the plan. And Trump and the directors, administrators, cabinet officials are going to do everything they can to unblock those bureaucracies and get power plants built faster
Yep.
and deliver more energy, not less energy. We've been like a low energy country for so long. It's nice to have a Department of Energy and an administration that's very much pro energy.
Well, for sure. A couple or 3 weeks ago, I shared with my audience in a different context the links to a pretty extended interview, and I'm sure you saw it too, that Chris Wright, the Energy Secretary, gave on CNBC recently, where he was just uber bullish on both uranium slash nuclear energy and natural gas, which are going to be, as you pointed out a few minutes ago, the two main ways in which we add to the capacity to
Yep.
fuel this increased demand for load. But in a broader sense, Scott, I wanted to move on and ask you about the uranium specific elements of what you know about Trump's policies, the executive
Mm.
order he came out recently. I've been flapping my gums a lot about that executive order of late, and that's great in a lot of respects. And I think where it comes to base metals and some economic things, honestly, it probably falls short. But uranium has got the benefit in two ways, I think, coming into this. Number one, there already was for the last few years now, actually since Trump's first term,
Yeah.
National Uranium Reserve and the mindset in Washington. The President Biden, to be fair, furthered somewhat during his time to understand that nuclear energy, we need a renaissance of nuclear energy to meet our needs going forward. And pricing wise, notwithstanding the recent correction in the share price, I think prices are firming up. And uranium producers, all else being equal, aren't going to have the problems, in my view, that maybe the nickel and lithium and cobalt ones will, where they're more economically challenged individual
Yeah.
markets. So you've got that going for you. Uh, Aside from those two things, or maybe complementing those two things, how do you see his executive order and other policies playing out to the benefit of our domestic industry?
Yeah, well, the message I was giving on the Hill last week was, we're not talking about an industry that is not healthy enough to be revived and saved. We actually have 6 members of the Uranium Producers of America now either back in uranium production or restarting uranium production. So combination of the solid policy, supportive policy, and frankly, just market conditions have caused a number of our member companies to move forward and get back into production. I think the surveys that we were asked to do during the Trump first administration, during the nuclear fuel task force, which came up with the recommendation to establish the strategic uranium reserve, we were asked, well, under ideal policy and market conditions, what could licensed facilities in the United States produce? And our members came up with a figure of about 20 to 25 million based on existing licensed facilities. Now, that's not going to happen overnight, and it would happen over time, but we have that capability. If we want to go beyond that, it's going to take new mines that are in the development stage who have not gone through the permitting and licensing labyrinth that many of our mines in UEC went through 6, 7, 8 year permitting and licensing timelines. And so if we want those new mines to come online in the United States, we've got to reduce the regulatory burden and the overreach by regulatory agencies. And so when the president came out about a week ago and announced that he wanted mining companies in the United States to put forward for consideration projects that are being held up because of federal bureaucracy or federal inaction. I think the directive was that within 10 days, we're getting close to 10 days now, the White House would put forward a list of projects that would be prioritized by the Energy Dominance Council and all the heads of the agencies and departments to make it happen. And so I think in the Uranium Producers of America, I think our member companies have submitted about 7 projects for consideration. And that's very exciting. I mean, that's, so you're right. I mean, I think uranium, producers in the United States, whether they're in situ recovery, which is going to be the bulk of the production, or they're the higher grade conventional miners in the Colorado Plateau, we're competitive on a global basis. So if you just give us a chance to compete, and we don't worry about Canada or Australia, we can compete all day long with free market companies. But if you get China and Russia out of our way, we can thrive and have a very, very much viable uranium industry in the United States. And that's important, not just for our own energy security, but also as we try to compete with nuclear technologies, with small modular reactors in Central Europe and Asia. How do we go sell them small modular reactor and then say, sorry, you're going to have to get the fuel from China or Russia? That just doesn't work. So we're excited. We just, we're back in DC urging Trump administration to, just keep heading in the same direction as you were in the first term, and even step it up. And I think those are the marching orders that we're seeing back in DC, is for the agencies and departments to do everything they can to create more energy and be able to produce more critical minerals in the United States.
Now, where are they at as far as any further funding? I know that recently Wright suggested that they want to start to refill the Strategic Petroleum Reserve, which
Yep.
the last administration depleted, as we know. Where are they at, if anywhere, right now, as far as adding to the Strategic Uranium Reserve?
Yeah. So the
Is there even the
strategic,
amount of
yeah.
is it even available yet?
Yeah, so that 1.1 million pounds of uranium that was purchased in the first tranche, it's very interesting. That was very quickly ring-fenced by the NNSA, which is the defense side of the Department of Energy. And that's another emerging story, is that the defense needs for uranium, which have been filled by stockpiles that were built up in the 60s and 70s, are now coming to an end in the next decade. And so very soon we'll be talking about not just uranium for energy security, but also uranium for national security. So
Right.
that was a really solid policy move. It's kind of morphed a bit now to a strategic enriched uranium reserve, or strategic low enriched, ISA low enriched uranium reserve, through the Nuclear Fuel Security Act, where over $3 billion between that act and a separate HALEU funding vehicle are directing over $3 billion to revitalize uranium conversion enrichment, and that'll be done by U.S. government purchases, sort of to stimulate and kickstart, these industries, particularly in enrichment, conversion, but also, the uranium and all that enriched uranium will be U.S. origin. So we were concerned that in the DOGE reviews that maybe those big dollar amounts might be viewed and seen as Biden policies. They really weren't. They were bipartisan supported, obviously passed in the last administration, but I think they came out of the origins in the Trump first term. So
Right.
we did hear that the low enriched uranium RFP, if you will, is moving forward, and then the HALEU we would expect as well. So it's kind of taken a little different shape, and I think it's still possible those programs could. They're kind of meant to be stimulus purchases that would then be resold into the market into the future. I think you could have a scenario where the Defense Department says, "Hey, wait a minute, we need U.S. origin unobligated uranium for aircraft carriers and submarines. Let's see about that material going to the defense side." So those are all seem to be moving forward.
And it all adds that much more to an already robust supply demand picture with more demand
Yep.
still. Great. Wow. Well, good stuff, Scott. I want to get on to UEC for just
Mhm.
a couple of minutes before we wrap it up for present purposes. But bottom line is, I think you'd agree with me that Act Two is still on the horizon, not too far off as far as this move. And it's good when you can identify the reasons. And again, thanks for pointing out that Kazakh ETF debacle, because I hadn't
Mhm.
understood that that was one of the reasons for the weakness recently. So I'm sure
Yep.
people appreciate that anecdote. As far as UEC is concerned, which has been on my recommended list for quite a while and done well, you've got one project in production and one about to go into production. So give us a quick update on
Yeah,
it.
so I mean, the last 5 years have been transformative. We've invested over $1 billion in M&A and uranium acquisitions to become the fastest growing uranium company in the world. We're now the largest U.S. uranium producer in terms of market cap, licensed capacity, and resources. And moving forward on the production front, very much the company is transitioning from that development, pre-cash flow and revenue to now, an operating uranium company. And I have to say, for someone who's been in this business 41 years, it's a lot more fun being in production than treading water.
Yeah,
But your challenges change now. You're very much in the operational details of keeping the mines running and ramping up. But we drummed our first yellow cake in Wyoming at Irrigary Christensen Ranch last month, and ramping that up as we get well fields 10-7 and 10-8, fresh new well fields and header houses up and running, and we'll see production ramping towards roughly around a 1 million pound annual run rate by the end of the year.
good.
Uh, Same thing happening down in South Texas, where I was just there visiting Burke Hollow, where we had laid the concrete pads, footings. We were installing the ion exchange columns for the satellite, and really just in the process of connecting Wellfield to the satellite to be in production by October. So to be ramping up in 2 states now is very exciting. We're still looking at all-in sustaining costs of around $40 a pound. We remain completely unhedged. So whatever your expectation for uranium prices going forward, that's what we'll achieve. And so, free cash flow could be 300-400 million a year by the end of the decade if we're ramping up to 5-6 million pounds of annual production. So very exciting times. We kind of planted the seeds during the very deep, prolonged bear market, and
Yeah.
now that things have turned around, it's harvest time for UEC and its shareholders.
Nice. Well, as you've been talking, I put up a couple of those recent news items for UEC. And as I said earlier, as far as Scott and my broad sector discussion back around Christmas time, right after that, we did a specific dive into the history of UEC and all the different projects. And so this is what you're looking for here on my YouTube page if you want to go back and watch that as well. And we'll have links to along with the notes here on the video. So Scott, great stuff as always. And you know, there's a lot of uncertainty right now, a lot of head scratching over whether we're going to zig or zag or what we're doing with all the tariffs. And all I can say is happy Liberation Day.
Absolutely. And yeah, for the uranium investors, this is incredible opportunity to add to
Yeah,
positions, and outlooks never look better. I think you'll have generational wealth created over the next couple of years here. And I think we've got a very long run ahead of us because we're going to need to build a lot of mines to keep up with all the nuclear power plants that are coming
yeah,
online around the world.
yeah, for sure. I agree. And I know you guys will be at the front of the line doing that. So Scott, thanks again. I'll look forward to our next visit.
Great. Thanks, Chris.
Yeah.
For much more of the National Investor's cutting-edge content and actionable investment opportunities, make sure to subscribe to Chris's free content at nationalinvestor.com. And don't forget to like this video and subscribe to this channel too. Thanks for tuning in, and we'll see you next time.